What's up, traders? Welcome back to another video. And in this video, guys, I'm going to be giving you the blueprint to smart money trading. Okay, so I'm going to be explaining the 3 most important things that you need to know and how you can use these things to level up your trading within smart money, right? We hear about smart money all the time. We hear about order blocks and balances, all that, and it all can get confusing and it all can get mixed up, right? I'm gonna give you guys the blueprint and what you need to focus on, the key things that you need to focus on when it comes to smart money trading. Okay, so as you guys may know, I made a video already similar to this explaining the 3 keys, and this is going to be another improved video on that and explaining to you guys why these are the blueprint and what makes up smart money trading as a whole, and how you can use these things to make a profitable strategy from. As you guys should know, the blueprint is going to be the 3 keys. All right, the 3 keys are structure, supply and demand, cause and effect. That's all you need to know, guys. When it comes to smart money trading, these 3 concepts is all you need to know. Structure is the most important thing in the market, guys. That's why it's number 1. So structure is number 1. Structure is very, very important. All right, and let me see, I'm gonna use AU right now, and as you guys know, we have 2 types of structure. We have our leg structure, and then we have our order flow structure. So let me go ahead and use AU right now, and I'm gonna go to a higher time frame and show you guys this. So on AU, we are bearish, right? We're bearish from what? We're bearish from this to this, and then this to this. So you can see that we are fully bearish on AU. So that is our structure. We know our structure is bearish. Now, if we go to the lower time frame, we have something called order flow. Now, when it comes to order flow can be very difficult, okay? Because we have multiple layers of order flow. So when we talk about this first key structure, this is the first most important thing in the blueprint is structure, is learning structure. So you're gonna have to learn multi-time frame structure, not just any structure, guys, multi-time frame structure. So if you have notes that you're taking down, whatever, write it down. I'm telling you guys the things that you need to learn that's gonna make your blueprint that much better. So when it comes to structure, multi-time frame structure. All right, so understanding what your higher time frame structure is, your intraday structure, lower time frame structure, and your order flow, okay? That is multi-time frame structure. You're gonna have to learn how to play within that. And that is important because in this case right here, so we have what? We have a higher time frame to the downside, as I just showed you guys. So AU is bearish, and we'll cover another pair as well. So AU is bearish, right? Now, what is our order flow? So we have 2 types of order flow right now. We could say this high to this low is 1 order flow leg to the downside, okay? But we could also say within this, right, is another order flow towards the downside. So you guys can see we have like a lower time frame order flow, and then we have a much bigger order flow. But the way to not get confused on this, because I know it can look confusing, is your structure. That's where your structure comes in. You know your higher time frame structure, and that's why we go by legs and not the order flow, because order flow can change quickly. Okay, so you have higher time frame order flow, and then you have your structure itself. So your structure will always be over your order flow. So no matter what happens on order flow, no matter what happens inside of this lower time frame, whatever the case may be, if it's not aligning with your structure, then you have to be more cautious on that, because guess what? Higher time frame is bearish. So while this order flow is going towards the downside, I can play these sales all day because order flow is aligning with my higher time frame and aligning with the way that I want the market to go. Because if we are bearish and order flow is bearish, that means everything is bearish, okay? From higher time frame to lower time frame, everything is bearish. So we are fully in seller's control. So that means the best plays are going to be towards the downside, okay? That's the best time to take these trend moves. And that's what you want to see. That is the prime time to get into your trades, okay? So best believe while this market was going down, you had so many opportunities here to sell. And you can see how much times we delivered these sell opportunities as we're going down. Now, order flow shifted, okay? Order flow shifted, and we broke this high right here. As soon as we broke this high and we see order flow is shifting, and this is why order flow can be important to know, is because as soon as you see order flow shifting, now you know that the market is going higher to target supply. Why are we targeting supply, and why are we not changing our bias? Because structure is bearish. Okay, we don't want to automatically change our bias once our order flow changes. We use the order flow as signals to understand who's in control of the market at that current time. So as this market was going down, sellers were in control. Now we have some buying pressure that was given here, and now we can see some buyers have taken over the market for now. Now, what is the reasoning? Okay, what is the reasoning for these buyers to come in? Why are we retracing when structure is still bearish as we talked about? Okay, structure is still bearish as we talked about. The only place that structure is not bearish is within this tiny lower time frame order flow. That really doesn't mean nothing unless we are aligning with our overall trend. Okay, so once we break highs and we start valuing these highs, now what do we think about? We think about, where does the market wants to target? Why are we retracing? Why are we pulling back? Well, we understand that this right here is a manipulation. This manipulation is the cause that caused this order flow to the downside. This has not been mitigated yet. As you guys can see, we still have that huge volume candle, and I drew out the 50% and look where we came into. So that is the second thing in our blueprint, is supply and demand. So I really just went over the three things already without you guys noticing. I just went over all these three without you guys noticing. So we talked about the structure, right? We talked about supply and demand, which is this right here. So supply and demand, there's a lot of categories underneath supply and demand. You have order blocks, okay? You have manipulation. So basically this right here is technically an order block, I would say. So manipulation, order block, sponsor candles, whatever you want to call them, those are all one thing, okay? You have Wyckoff. Okay, Wyckoff is the next important thing that's underneath supply and demand, okay? Because Wyckoff shows us the evidence of buyers and sellers inside the market. So what do I mean by that? So technically, right here, we are creating an area of supply. Why? Because we have a Wyckoff distribution going on here. So this distribution is showing us evidence of sellers. Why is that important? Well, let's go back to our three keys. Our structure tells us what side of the market that we want to play on. So structure is bearish. Structure is telling us we want to be sellers. That's all we need to know. Structure is telling us that we want to be sellers. All right, now supply and demand. What does supply and demand tells us? Supply and demand gives us the areas that we want to sell from. Well, we know that this is an area we want to sell from, so the market had now traded inside this area. So what does cause and effect? So cause and effect is proving that the market actually wants to sell from here. So what do I mean by that? Just because I labeled this out as a supply area doesn't mean that we still couldn't have came higher inside of this range, right? So that's where cause and effect comes in. Cause and effect is proving that the market actually wants to sell from here. And how do we do that? Well, it's happening right in front of our face. Change of character, okay? So once the market is inside of your supply and demand zone, you want to go into your cause and effect phase, which is proving that we actually wants to sell from here, okay? So how do we do that? By looking for the market to give us a reason. So this right here is a reason. Seeing this change of character, that's our cause and effect, right? This is what we want to see. So now we just completed our whole blueprint. Now we're able to look for sales, place limit orders, and do what we need to do. So this is on a higher time frame scale. We can even take this to a lower time frame scale right now. Now I'm gonna show you guys how we get these sniper entries. So we're using the same blueprint, but just in a fractal nature, because so guess what? We use the blueprint to identify why we wanted to sell from here, what we wanted to see to sell from here, and why we're looking for sales from here. Now we can use the blueprint again on a lower time frame, 15-minute, 5-minute, whatever you want to go on, to validate it even more to get a smaller entry. So we already know this area is validated by our blueprint and validated by our overall strategy. Okay, so we could really just place a limit order from here if we really wanted to. Okay, but you know, we want lower time frame entries. We want to get the best entry possible. So what can we do now? Well, let's start over again. So what is our structure? What is our current structure? So let's go ahead and mark out our structure. We have what? High, low, high, low, high, low, high, low. So right now, what is our current structure? Right now, we are bearish. Okay, we are bearish. We've broken this low. We are bearish. We created that change of character. So right now, this is our little bearish structure. So this is our high. This is our low, based on this lower time frame. Okay, even though we're bearish on a higher time frame, so this change of character means a lot. So you guys can see how I'm going and putting layers on the blueprint. So now what do we need to do? Supply and demand. Well, where do we want this market to come into? Where do we want to sell from? Right here. Okay, so now we identify where we want to sell from. What else do we need? Now we just need cause and effect. I actually had two areas of supply and demand, which it was this area right here, and then our origin is here. The reason why this one is the most important area is because this is the cause. This is what's holding us to the downside. So technically, this is what's holding our lower time frame structure right now. This is what's holding this little structure that we have here. This is what's holding that. Okay, because this high is what's our last high that created this low and made a new low that changed us into sellers. This is what created our change of character. I'm hoping you guys understand that. So now what do we need to do? Now we need our cause and effect. Okay, we need to validate that the market wants to sell from these areas. So the market has failed to sell from here. Okay, now what do we need to do? Now we want to wait to see if the market will validate sales from here, and then we can take sales from here and continue to the downside. Okay, and you can even go on an even more fractal level. All right, so I'm not gonna do that. That's too much work, but I'm just showing you guys examples of how you can use this. These are the three things. These are the three things that we use. It's that simple. All right, these are the three things you need to focus on. If you're looking to start learning smart money strategy, focus on these three things: understanding your structure, supply and demand, your cause and effect. That's it. That's it, guys. You really don't need too much. Okay. So let's see. Now, as you guys can see, AUD CAD is another perfect example, right? I probably should have used AUD CAD, but we can just look at it right now. What is structure? Well, let me zoom out a little bit more. So overall structure, we're bearish. Now you guys can see that we did break structure here, but look what we did. We completely broke it down again. So now instead of worrying about this huge move to the downside, we can't play that. So what can we play? We play the order flow. What is our order flow? Let's go down and let's see what is our last recent order flow. Well, we know that this high here created this low. Cool. So that is our order flow leg. Now, what can we do? We can zoom in on lower time frame. We can see some smaller time frame order flow. We broke this high. We can see the market continue higher, high, low, high, low, high, low, high. We broke this low, created a new high. Now we broke this low again. Now we ask ourselves, why is the market suddenly breaking lows and why are we getting change of characters? Well, it's no surprise we have tapped into a supply zone. So there it goes again. There goes our three keys. There goes our blueprint. Structure, bearish, supply and demand. Our supply zone is right here. This is the manipulation that was not mitigated. Cool, we've tapped into that. Where is our cause and effect? This is our cause and effect. All right, cool. Now what do we do? Well, now we can zoom in inside this area and we can redo it again. So structure, high, low, supply and demand, 1, 2. What now? Now we just wait for cause and effect to sell the market lower. That's it. That's it, guys. So it's that simple. Now understand there is sections underneath each of these three keys that you will learn, but these three main concepts is what you need to know. That is the blueprint. All right, guys. So I hope you guys enjoyed this video. If you guys have any questions for me, you can hit me up on Instagram, Telegram, whatever the case may be, guys. So I will see you guys in the next video. Peace out.